Hello and welcome to The Rate Stuff. I'm Jack Izzard.
And I'm Peter Stimson.
You join us on heatwave number 5 of what is almost certain to be the hottest summer on record here in the UK. So hence the slightly unconventional dress. Apologies if Peter's legs are bothering you. You can of course switch to our Spotify feed to have audio only.
Yes, of course. And apologies for Jack's Breton gigolo look. Again, Spotify is available.
Ooh, ouch, Peter. Anyway, let's get back to mortgages, because that's what The Rate Stuff is. It is your essential guide to all things mortgage. And today, Peter, will be looking at whether the soaring temperatures might be turning up the heat on the mortgage market as well. Stay with us on The Rate Stuff. Okay, let's start with just a little sense check on where we are. From an economic point of view, not too bad. We've had the official economic data for the first half of the year in, and the scores on the doors, frankly, not too bad at all. So if you look at GDP, so the growth of the economy, 0.6% in the first quarter, 0.4% in the second quarter of the year. Given the conflict we've seen in the Middle East, that's not half bad. And on the inflationary side, well, we're moving in the right direction as well. So we saw the June inflation figure come in at 2.6%. That's down from 2.8 in May.
Yep.
It's the lowest level in 15 months. So I step back, I look at the economy, look at inflation, I think, could be a lot worse, Peter, right?
Yeah, I mean, on the face of things, it looks all right. GDP, I'll start with that. GDP looks okay, but GDP, if you go back and look at the GDP numbers back to 2022, there's always this kind of statistical anomaly that the first half of the year, GDP numbers come in reasonably strong. Second half of the year, they come in, fairly weak. It's something to do with the way they're collecting the data. So we wait and see what they come in for sort of Q3, Q4.
Okay.
There's always this tendency that decent first half, poor second half.
Okay.
So
consider my expectations.
Wait to see on that
GDP.
one.
Okay.
Inflation, we'll go into that in a bit more detail because we think there's a bit of a wave coming down the line on that one. Swap graph going up now. Now, we could have put the swap graph up for this month and the month before and probably the month before that, and it probably would look pretty similar, to be honest with you. Swaps are bouncing around in this sort of 25 to 30 basis point window, somewhere between about 4.15 and about 4.4. And I see lots of chat from brokers on LinkedIn and other sort of message boards that sort of say, oh, great, lenders are reducing rates. Well, they are sometimes, but then, the following week they're putting them back up again. They're just really following the swap curve up and down. And the swap curve is being driven predominantly by the price of oil. Trump claiming he's talking to Iran again. Whether Iran's actually talking to him is another matter. And a little bit was early days of, will Andy Burnham tax and spend, or, what's going on? Maybe a bit less of that now. So the Iran war is just carrying on, and the swap curve is just kind of following.
We're in a kind of holding pattern, as you say. Those swap rates, yes, this is kind of narrow channel. They're bouncing up and down a bit. Brokers, of course, will see this in terms of the product rates. As you say, lenders make a big show when rates are going down. They're not quite so pleased to shout about when they creep back up, and they have been doing that. So for every cut, you're often seeing them going up again.
But you'll see from the graph, you're getting some fairly big intraday movements. You're still getting sort of 5-10 basis points intraday movements on the swap curve. So it's still making stuff quite challenging for lenders to price out there.
And lenders, they've really got no margin to cut beyond that. They are just really having to follow those swap curves.
It's still so, it is very challenging for lenders out there. The prices that lenders are marking at, there is very little margin to cut further.
Okay. So the last few episodes we've been talking about this inflationary wave. This kind of energy price spike that we saw following that outbreak of conflict in the Middle East. That hasn't gone away. No. It's still there.
It has.
But stay with us, because there could be another price shock coming our way. Nothing to do about the Gulf. It's right here at home. On this week's Hot Topic, I'm going to channel my inner Jeremy Clarkson. No, not talking about fast cars or making off-colour jokes, or not quite as many as usual anyway, but instead talking about crop yields. Now, this isn't a topic that comes up very much on the rate stuff, but it needs to come up now, because 2026 is sure to be the year with the hottest summer on record. in the UK. We've seen records being skittled throughout the summer. We're on heatwave 5 now. As we record today, there's an amber heat warning across much of England. It was the driest July for 190 years. And in terms of that heat, well, Peter, if you cast your mind back to 1976, the year that everyone remembers as El Scorchio. Peter, I'm sure you were probably wearing similar shorts back then.
Same pair, yep.
June 1976, the hottest temperature recorded was 35.6 degrees. This June, 38 degrees. That tells you just how hot things are. And the lack of rain is really going to impact farmers and crop yields. And we're already starting to see reports coming in from farms across the UK. Yields are really down for the big staple crops like wheat, barley, and also oats. And potentially you're going to see the same thing from Europe as well. So we import a lot of our salads and vegetables from Europe, and less supply of food means prices go up. So we could have a real kind of food price inflation wave heading our way now, Peter.
Yes, I mean, if you go back and you look at sort of where inflation's gone over the last sort of 5 years, if you look at the 5 years from sort of 2021 to beginning of 2026, inflation overall in that period went up around 28%. But food inflation, if you look at that specifically, went up 40%. And food inflation peaked in 2023 March at around 19%. And a lot of the food inflation was driven by sort of shortage of fertilizers and the war in sort of Ukraine, Russia. Now, what's kind of going to be the problem is, you know, like you say, the shortages coming out of the sort of, you know, the drought in Europe, and again, sort of issues going on in Ukraine, Russia. Looking ahead, a lot of people are predicting the sort of food inflation goes to maybe around 10% by December. Inflation at the moment is only around 2%, but if you kind of, 2.6%, but if you kind of look at where food inflation could go to, food inflation on its own being added into CPI could mean CPI goes to around 3.8% by sort of the end of the year. That's before you add into effect the impact of energy into it.
Right.
So we then start adding energy in, potentially the impact of gas, because obviously we haven't got into the winter season, and the potential impact of gas into that. You could be talking, you know, CPI going into the sort of the fours, high fours.
Oh, really? Okay.
Which could be, you know.
Well, that is going to set major alarm bells ringing at the Bank of England. So you remember their goal, their mandate is to keep CPI at 2%.
Yes.
They've kind of had to look over that now. But if you're seeing CPI going past 3-4%, you've got to think that the Bank of England is going to reach for the trigger on interest rates, and that is going to start seeing interest rates cranking up later this year. So talk to me about timings. So the next Bank of England interest rate decision is in September.
Yes.
Could we see a rate rise then?
I think that's too soon. There's one more CPI, set of CPI data before then. I don't think inflation's going to be particularly showing before then, because the food inflation data is not going to be coming through. And again, the energy inflation data is probably not really going to be showing in that set of data yet. After that, it's the 5th of November, bonfire night. By then, I think the impact of inflation is probably going to be coming through into that set of data. So I suspect if they're going to pull the trigger, it will be November. If you're looking at the swap data as well, which we showed earlier, the swap numbers have been sort of pretty much stuck around 4.15, 4.24. Hovering in those sort of margins for the last sort of 3 months now. So the markets are pretty much pricing in 1/2 rate rises. And I think we're probably likely to get one by the year end.
So that would mean base rate of 4% plus by year end.
So one, maybe 2 rises sort of by early 2027.
Okay, and obviously that will drive up mortgage product rates as well. Okay, so that's another.
Well, not necessarily drive up mortgage product rates on the fixed side, because it's already been priced in.
Okay, yes.
So
it could
on the
be
fixed
high
side
water
of things,
mark.
But then the question is, you know, how long is the inflationary push through? How long does it last? So, you know, the unresolved question is, what happens to energy prices? How long does this unresolved issue in the Gulf last for?
Well, because we're not out of the woods there yet. We're in this sort of limbo phase. So that swaps chart we showed earlier on showed swap rates just kind of bouncing around that fairly narrow channel. If you start adding in food price inflation, and there's another flare up of energy price inflation,
and we've got to get through the winter as well. So we do, if we have a cold winter, gas prices, go through the roof, which pushes through into the cost of household heating and stuff like that, that could be quite painful as well. So there's quite a few unknowns to get through.
And we are seeing some unexpected consequences. Yes, this danger of a kind of food price inflation wave, which turns up the heat on swap rates and potentially interest rates as well. That's unpleasant. Just looking ahead at the impact on the property market, so leaving aside the mortgage market for a second, we've kind of seen this mad summer where everyone's been, baking inside their houses and outside. Do you think it's going to kind of change the demand for the sort of properties that people want?
Yeah, it's interesting. I mean, you cannot get a air conditioning unit for love nor money. Right. So all the portable ones have sold out. Yeah. So I think there's going to be a big demand for retrofitting of air conditioning units. So it's first thing. So I think that's going to be a big demand. So if your house comes with air conditioning, that's going to be probably a big plus if you're thinking of buying or selling a house. I think the other thing we had a chat about was flats. So flats have taken a pretty big bath over the last sort of 4 or 5 years. I think there's a number of reasons for that. One of them was kind of coming out of COVID. People wanted external space, because obviously, lockdown, people wanted, access to
gardens really came
gardens, roof terraces, that kind of thing. So I think there's a danger that flats take another bit of a hit. The fact that people are baking in a flat without air conditioning potentially and haven't got access to outside space. So that's again another factor. People want a garden, people want outside space. So yes, I think again it could impact on the type of property and the amenities that come with a property. So I think that's
it's worth
a further factor.
No, it's worth saying that most of the property we have in the UK was built to keep the heat in rather than out.
Yep.
And this summer, yes, it's extreme, yes, it's record breaking, but it's part of a pattern. It's climate change, and we're going to see more hot summers like this. So yes, long term, we could see a change in the sort of properties that people want. I take your point about flats.
Yes.
I mean, as we record this, there's an amber heat warning across much of the UK, 38 degrees potentially. If you're stuck in a flat in temperature like that, it's brutal, isn't it? So
absolutely.
we could see certainly aircon, we could see, smart design, demand for places with gardens as well. So yes, some unexpected knock-on effects from this heat wave, both to interest rates and potentially to demand for properties as well. Okay, Peter, that's a great one. Thank you very much. That's a wrap on this episode of The Rate Stuff. We will be back next time to take another look at the mortgage market in depth and what's driving it. Join us then on The Rate Stuff.